Welcome to Markets Now. I'm Michelle Work with Brian Grete with Pro Farmer, and pretty much a higher day in most everything. And Brian, I want to start off talking about soybeans, the price leader once again. How much of that is South American weather versus hopes we're maybe even going to get more business with the leaders of China and the U.S. meeting this week?
Yeah, I think it's a combination of both, and that's the reason we had such an explosive move to start off the week is because we have the supply side issues with Brazil obviously being very hot and dry through central and northeastern portions of the country, excessively wet in southern areas, and so we're starting to clip away at the production estimates down there. What was once thought to be a sure record soybean crop in Brazil this year, that's no longer the case, and if the adverse weather continues, then we may no longer have a record crop. And so those production estimates are coming down, and that's a pretty dynamic shift in the market fundamentals there. On the demand side, China continues to buy. China and unknown destinations have bought more than 3 million tons since November 3rd via daily sales. And so that's a positive. Now, it's the key time frame for U.S. soybean exports. So we should see this type of business. But when you get it on a day-to-day basis, it's a constant reminder to the marketplace, and that's definitely a bullish development.
Yeah, when you look though, export inspections have been picking up, but soybean export sales themselves are still behind where they were last year, aren't they?
Absolutely. I mean, we're still kind of swimming upstream from that perspective, but we need these day-to-day sales and the strong weekly sales to have a chance to catch up. And so while we'll probably be catching up throughout the marketing year, the narrative from the recent perspective is that it's improving, and that's helping us, especially with the Brazilian crop getting smaller.
And the big leader really was soybean meal with more new contract ties today, right?
Absolutely explosive, and I think that one's critical because the meal market helps drive not only soybeans but also the corn market, and so with soy meal taking on a leadership role here, it leads itself to even more upside potential from a short term perspective.
From a technical standpoint, now talk about January beans and how tough it is going to be to get above the $14 level because that stopped us prior.
Yeah, so if we can get closes above $14, then it opens upside to 14.20. That's the next level, and above that's 14.40. And then if you get above that level, then there's even more explosive upside potential. So we have these nice level areas at $14, 14.20, and 14.40 that need to be climbed above here in a short-term perspective. And if bulls can get that done, then it gets even more friendly from a technical perspective.
Yeah. And the corn market followed soybeans after making some new lows here recently. So, is that market putting in a bottom or not?
Well, key reversals typically are an indicator that a low is in place. Corn is such a follower at this point in time that I think it's going to take soybeans and soy meal to lead the way. If those two markets do so, and corn can post some follow through to these gains that we saw here to kick off the week, then I think absolutely seasonal lows are in place. Now, the caveat there is that November isn't a very friendly month from a seasonality standpoint for the corn market.
And when does the corn market start to price in some South American weather premium?
Well, I think that's a later issue, and the reason being is that the first crop or the full season corn crop in Brazil accounts for about one quarter of their production. The safrinha crop actually accounts for three quarters of the production, and that's the crop that's planted after the soybeans are taken off. And so the market has some time, so to speak, with the corn issue in Brazil to see whether the weather turns around or not. But these delays that we're seeing for soybean plantings mean that delays in their harvest cycle, which also means delays in planting the safrinha crop, which opens the door to more adverse weather as that crop moves forward through its key production cycle.
Yeah. Well, wheat did reverse today following corn and soybeans, but boy, it was a reluctant follower, wasn't it, Brian?
Absolutely. We just is struggling right now. We all know about the export issues and those deal that the market's dealing with right now. There just isn't a lot of positive news. Drought in the HRW areas, but we've seen crop conditions improve from where the initial ratings were. And so I think that the wheat market, more than anything, needs corn, soybeans, soy meal to lead the way higher. And hopefully wheat becomes a more active participant.
But at that point, do prices get too high for us to become competitive? Because that's the other part of our problem, isn't it? Is just demand.
Absolutely. It's a catch-22 situation. So if we do see the futures move up, that obviously increases the price for US wheat, which decreases the competitiveness on the global marketplace, and we're not real competitive in the way it is. And so, from an export standpoint, the Black Sea region continues to just dominate. Europe has also gotten involved there, and the US is far down the list in terms of destinations for wheat exports.
And cattle, we bounced off of some new lows for the move. Are the funds done liquidating, especially as we go into a cattle on feed report this Friday?
Well, they definitely liquidated a lot of long positions, and some of those were the longest held long positions in the commodity complex. And so when they decided to get out, they got out en masse. And so I think it's critical here that we try to find some footing, not only from a futures perspective, but also from the cash market. The cash market was down more than $5 or about $5 last week. And that was the result of that heavy liquidation pressure in the future. So we need the futures market to put in a low. We need the cash market to put in a low. From a supply perspective, while supplies won't be as tight as what they were once thought to be in 2024, they're still historically going to be tight. And so there is some bullishness there. The concern is on the demand side, and what everything that's going on right now will have an impact in terms of usage, not only here in the United States, but also on the export side.
Yeah. But the cattle on feed report was one of the catalysts that turned this market, upside down here. So coming into the next cattle on feed, we're anticipating bigger placement numbers there too, aren't we?
Absolutely, and that's really the driver of what caused the heavy liquidation pressure. So we're going into this report on Friday with a trepidation, and just the market is skittish. And so if we get that report out of the way and we don't have a major bearish number from the placements, then I think that we probably have a better chance of moving higher and signaling the lows in place.
Yeah. So hogs got a nice ride when cattle were going the opposite direction. We had some cattle hog spread liquidation, but that market now, is it starting to stabilize on its own fundamentals or not?
Yeah, I think so. We're still seeing the cash market decline seasonally, but I think with the futures action here, it's given the impression that traders feel like an early seasonal low will be put in this year. That would be counter to the past couple of years. We've seen those seasonal lows carry into the new year the past couple of years. And so if we can mark a low sometime here late fall, early winter time frame, that would be ahead of what we've seen those past 2 years.
So is that early seasonal low coming, Brian, because demand is getting better, or what is driving that?
Well, demand has definitely improved through 2023 here, and China's been the big driver. But when you look at the top five markets, exports are up to all five of them. And so we have seen a pickup in the export side of things. We still have some supply side issues that we're dealing with there. So it's kind of the flip of the cattle market. But from a demand perspective, I think the exports are strong, and they'll continue to be strong as we move through 2024.
Okay, some good news for a change for the hog guys. Thanks for joining us, Brian Grete with Pro Farmer. That is Markets Now.